How are you feeling amid the fallout, where we still worry about First Republic on the day?
It's remarkable. I mean, a week ago, you would not have thought that Silicon Valley Bank would be gone and that First Republic could even be discussed as a potential bank that would be in any kind of trouble. It's a very stable institution. And look, I think it's hard to overstate how important SVB has been to the tech ecosystem. They're kind of the nerve center, the Professor X with the dome. Like it's the heart of the industry in terms of all the different things that they do. Which a lot of people think just about the deposits, which was what the FDIC stepped in to really help and recover. But they lend to startups. They have a $9.5 billion venture portfolio of direct investing in startups, as well as positions in major funds like Sequoia and Andreessen Horowitz, which was revealed yesterday. They're a major sponsor of events, conferences. They do introductions between VCs and startups. They lend directly and do working capital lines to venture funds and administer venture funds. So
they're a linchpin, basically.
I mean, they're the centerpiece, right?
Yeah, but what's so interesting now is everyone was like, oh, you should have diversified your funds. Oh, your treasury management wasn't where it should have been. But ultimately, we went to our audience and said, look, how difficult is it actually when you're a VC fund, a first-time one, perhaps a small one, or indeed a founder? How hard has it been to diversify? Has it been easy to just wander into JP Morgan, get a new bank account? They said, look, 44% say it's hard, it's complicated. How hard was it for your portfolio companies, for you, for Greycroft itself?
It's brutal. I mean, you can't just open a business bank account overnight. I mean, there are fraud checks. They want to know that you're a legitimate business. So it's not like you can just pull your money out of SVB and then transfer it immediately to somewhere else. You have to have had another bank account open. And I think, unfortunately, in the hectic rush, some people put the funds in a personal account or something just because they had no other bank account, right? So it's been a real kind of challenge to figure out where else you're going to put your money. But you're seeing major influence to other startup banks like Brex and Mercury and these other businesses, and of course JP Morgan and Citi. But you're also seeing some folks that tried to open a Citi or JP Morgan account saying, look, it was brutal, I'm going to go back to SVB or someone smaller.
Interestingly, of course, Greycroft has a particular focus on fintech in many ways. And Ed, there is a big repercussion here when it comes to financial conditions contracting. We've just seen the ECB hike rates. We're thinking about here in the US, and more broadly what that means for risk sentiment.
Yeah, I mean, Cameron, what we're discussing on the show in the last 24 hours is a de facto tightening. How difficult is it for your founders to now go out and ask for money? How difficult is it for you to convince others to write checks?
I mean, it's definitely slowed the industry down. I think for the past kind of week or two, and now we're kind of in sort of recovery mode, trying to figure out what's going to happen. So I think there's kind of a pause. But I spoke to a founder this morning who's raising a round that's going to wire in the next couple of days, and he's confident it's going to close. So I think it's not like we're at a standstill, but at the same time, I think it's definitely causing people to kind of take a little more time to think about what they want to do. And more importantly, I think a lot of founders have spent the past week, like you were saying, diversifying their bank accounts, figuring out what they're going to do with treasury management, things that they hadn't thought about a week ago, right? So I think that's been the real focus this week. And then we'll get back to kind of fundraising and growth in the next few weeks, hopefully.
Cameron, there are areas that people are still excited about. I'm going to go there, Caroline. I'm going to ask about artificial intelligence and crypto, right? But my point is, we spent the first 3 months of this year pretty bullish, actually. New funds being launched, checks being written. Are there areas where you do think we'll see activity imminently?
Well, look, obviously AI is the big hot sector, and it's ironic because AI has been around for years, but was always kind of behind the scenes until ChatGPT kind of made it a consumer-facing endeavor, and now it's become kind of more mainstream. But I think that certainly fintech is still a massive sector and a big opportunity. You're also seeing, as people have found that in the public sector, as the banks have kind of been in trouble this week, the Nasdaq has done quite well, and you're seeing the mega tech names kind of doing well. So people are maybe moving towards the larger cap tech names, and if those folks do well, then they can certainly be people in the ecosystem that will help with investing in startups and potentially acquiring them. So I think fintech is still a sector that's booming, and then healthcare is one that's still getting a lot of investment. Healthcare is probably one of the hottest sectors right now and still continues to be.